Welcome to this week's episode of Accredited Investor Markets Radio. Each week, we speak with you about investing in alternative assets. Unbiased and beholden to no one, Accredited Investor Markets Radio does not accept advertising from any investment firm or financial advisor. Accredited Investor Markets Radio is the spoken word sister of AccreditedInvestorMarkets.com, the internet's most comprehensive and unbiased educational resource about crowdfunding, angel investing, venture capital, private equity, private shares, and other investment classes beyond publicly traded stocks and bonds.
Hello everyone and welcome to Accredited Investor Markets Radio. I am Christopher Cahill. Later on, I will speak with Robert Labate. Robert Labate is an eminent entertainment lawyer from Chicago, and he is going to speak about investing in movies. That's investing in the making of movies, not in compiling thousands of Betamax cartridges or something like that. But first, let's talk about innovation, scientific innovation, financial innovation, and maybe even tax policy innovation. About the first one, scientific innovation, let's talk about watery computers. No, not the iPhone you should not have taken into the bathroom this morning, but rather synchronous computers operating via physics of moving water. When you can do this, you can precisely control water droplets using fluidic computation with many applications in biology and chemistry and scalable digital manufacturing. Okay, that's a mouthful and I'm not sure what it all means, but I can refer you to a June 8th, 2015 article from the Stanford News Service entitled Just Add Water. Stanford engineers develop a computer that operates on water droplets. This can be found at news.stanford.edu. The scientists involved are Manu Prakash, a bioengineer at Stanford, and his graduate student, Yorgos Katsikas. They are the co-authors of the scientific paper. Well, that sounds exciting once we figure out what it means. What about financial innovation? Well, here's something new that I think is really interesting, and it's written about in the New York Times, May 8th, 2015, an article by Frank Partnoy. Frank Partnoy is a law professor at the University of San Diego, whose memoirs I hope will not be named Partnoy's Complaint. Okay, I apologize, that was lame. Anyway, the article is entitled Smart Money by Andrew Palmer, and it's entitled that because Andrew Palmer wrote a report on a new financial instrument, new to the United States, called social impact bonds. Social impact bonds are a way to attract private investment to public functions. For example, prison reform in the UK. The UK government, with respect to Peterborough, England, set up a social impact bond. Investors would buy the bonds, and the cash would be paid into a prisoner training program. Investors received a promise of future payments from Britain's Ministry of Justice. On what basis? If the prisoners committed fewer crimes than did other groups. The idea is that the government would spend less money on prisons, investors would earn an attractive return, and investors would be interested if they believed in the project in which they were investing. It's a way to get people who like such programs to put their money where their mouth is, sure, but thinking as a former social scientist, which alas I am, how do you measure this? What reliable measures will you have of recidivism, or of what kinds of crimes are being committed? Are they worse or better? How do you create standards by which you can measure the performance of the bond? How valid will the reports be? After all, the compiler of the information is likely to be the very public entity that benefits from the bonds and might have its own incentives not to publish the particular information that might be correct. Well, maybe it will lead to some litigation of great interest, especially to social scientists. So now there are social impact bonds in Britain that direct money to various social ends, like finding and supporting adoptive parents for hard-to-place children, keeping children out of foster care, getting homeless rough sleepers off the streets. With the first American social impact bond, investors are financing a rehabilitation program for adolescents at the Rikers Island Correctional Facility, that's in New York City, and will be paid back with interest if reduced recidivism goals are met. As I say, interesting. Let's move on to tax policy innovation. Let us suppose you are running a startup that seeks money via Kickstarter. Maybe your startup's a rock band and you ask for traditional Kickstarter funds. Kickstarter funds have been a matter of rock group asking for money, willing to give a CD if you donate $100, something like that. Okay, so you get $100 for the CD. How do you report the net value of the funding over the value of the premium being the CD? Well, strangely, according to a Forbes.com article dated June 17, 2015, entitled Crowdfunding as an Investment Tool is Trouble Brewing, written by Kelly Phillips Erb, it's not clear what the IRS would do. The IRS has not said. By the way, I don't much like this title, Crowdfunding as an Investment Tool is Trouble Brewing, because Ms. Erb is writing about traditional Kickstarter funding, which is a form of gift, a form of donation. Her title, Crowdfunding as an Investment Tool, makes it sound like new crowdfunding, which is the purchase of equity interests or the purchase of positions in debt, which is not what she's talking about. But let's get back to the topic. All right, so you get a bunch of money from Kickstarter. How do you book it? Do you book it as income, net of expense? Do you book it as a gift, net of expense? Well, if it's income, you pay tax. If it's a gift, you don't pay tax, but the donor may have to pay tax. And what's the fair market value, by the way, of some of these premiums? If the premium is a tour of the Stable 12 Brewery in Phoenixville, Pennsylvania, which is discussed in the article, was that really worth $1,000? And no startup is going to be in a position to litigate such issues, much less a nonprofit that uses Kickstarter, say the Baroque Band of Chicago, which is a very fine period instruments orchestra, on whose board I have the privilege to serve. If Baroque Band for $1,000 gives you a tour of a musician's home where there are many harpsichords, will the IRS come a-knocking, and will Baroque Band have to spend money dealing with that? Open questions. But let's move to some unambiguously happy news. There's a book. It's called The Investor's Guide to Alternative Assets, the Jobs Act, Accredited Investing, and You. It's a 2014 book by Jonathan Friedland. Jonathan Friedland is the publisher of Accredited Investor Markets and of FinancialPoise.com. Well, the book was given 4.9 out of 5.0 stars by reviewer Lauren Leibovitz and rated by her as one of, quote, 5 crowdfunding books to read, end quote. For more on that, please see her article at crowdfundbeat, all one word, .com. Well, that's enough for me. Let's get to the interview. With me today is Robert J. Labate, and we're going to talk about film investing. For more than 2 decades, Bob Labate has maintained an active litigation practice in corporate restructuring and transactional media and entertainment law. Bob has been an adjunct faculty member at DePaul University School of Law for many years, where he teaches, among other things, the law of film and television production. Mr. Labate's entertainment practice, which is best known for film production, includes television, digital media, content acquisition, celebrity branding and licensing, financing, book publishing, and music. He represents media companies in acquiring content for worldwide distribution, as well as companies that wish to license celebrity rights in connection with advertising campaigns, and celebrities who seek to, quote, take down, end quote, defamatory internet postings in violation of the Digital Millennium Copyright Act. Bob is a partner at Holland & Knight, a global law firm. So Bob, as you know, and the audience is about to know, we met because I had been referred to you because I had a friend and dramatist I know and admire who was working on a first film, and I was asked to help. Mm-hmm. So for our first hypothetical, let's suppose that someone has money to invest and a friend or dramatist she knows and admires who has a screenplay, some principal actors lined up, and a production budget of sorts, and this would be her first movie, and you can help. An indie film, Sundance. Anything wrong with that picture?
There's so much wrong with that picture. We could go on for hours. But I think I'll start with just some of the statistics from Sundance, and let's look at the 2004 Sundance Film Festival. There were about 4,000 entries to that festival, of which they picked 117 feature films. Just so you get the idea, there's less than a 3% chance, which I think is it's worse odds than getting into Harvard Business School. So if you think it's tough to get into Harvard, you getting into Sundance is even tougher. The thing that should give your investors pause is that those 4,000 entries cost roughly $3 billion. That's about $750,000 on average per film. And that's a lot of money because the estimate is that there was only about $100 million in revenue from all of the films that came in from those 117 films that were accepted. Get your attention.
Yeah, 100 million. Now, my math is not one of my strengths, I guess, but that's about 3.33% of total investment was returned.
Right.
That's terrible.
They're not good odds.
No.
So the best thing you can do is first to find out whether your friend, acquaintance, daughter, cousin has really done her homework. And by that I mean when she comes to you, does she have a budget? And is that a budget that's been put together by someone who's been around the block before without their mom? Does she have a time schedule? Has she figured out how she's going to distribute this film? Is this going to be a made-for-TV film? Is this going to be something she's going to post on YouTube? Or maybe she has George Clooney, who she met at the Starbucks and who agreed to be in her film. That's good because he's bankable and you can get agreements from foreign distributors. You can get pre-sales from that. So you really want to dig deep and make sure she's done her work. And if she hasn't, then think about having her do a short film, 7 to 8 minutes, which costs $10,000, $20,000.
So a short film would presumably help draw appropriate interest, or perhaps help gauge appropriate interest?
Exactly. Doing a short film is good for a couple of reasons. One, whenever we start drafting something, we always prepare a short form first, and we want to really outline where the film's going. And that's what a short film does. It's kind of a shakedown cruise. And shakedown in a good sense.
There's a good sense of shakedown.
There's a good sense of shakedown, which is, does she have her contracts? Can she do the contracts? Has she acquired the underlying rights for what she's doing? Is she talented as a producer? Maybe she's a writer, and this happens quite a bit. You have a writer or an actor or someone who's not really a business person who says, I've got to make this film. And so she becomes a producer only to make the film that she's written. So it helps to know whether she can actually do all this, and making a short film, 6, 7, 8 minutes, not only becomes her calling card for other producers or studios, it also can be helpful in raising money if she's going to do crowdfunding, and it gives you a sense as to where the film's going. Is this an animated cartoon that's fun, or is it goth drama? Sometimes it only comes out once you start doing the film.
All right, so let's say it's a a drama meant to appeal to the NPR crowd, perhaps, and so you have to get music for something like that.
You're really limiting your audience, aren't you?
Well, but it should be a good demographic. But anyway, the music, of course, would have to be a solo guitar playing something mournful. But I only mentioned that because you mentioned underlying intellectual property rights, and there are a bunch of them. Could you comment on the sorts of rights, copyrights that have to be accounted for when you're putting together even a short film?
Sure. You mentioned music, and music is one of the biggest headaches in film because music is different. If I have a song, I'll give you an example that I had a client who was doing a documentary on autism, and she fell in love with a song by Yoko Ono for the over the title opening credits, which is the most expensive. So I told her, I said, JJ, don't fall in love with the song, and certainly don't put that in the song because you're going to have to acquire it, and good luck trying to get to the music publisher. She actually ignored my advice, and she was able to get a response from the music publisher. The music publisher then said, okay, I want an amount which is equal or more than her entire budget for her film for these rights. To which I kind of gloated, said, well, JJ, I guess you can't use that. Think of something else. She then went directly to Yoko Ono, who said, let her have the film. Let her have the music. To which the music publisher said, okay, fine. They said, you can have the music, but gave her a very high price. JJ had to go back to Yoko Ono, who then said, no, and a reasonable price. This all took a year. So, and that's just one song. Now, not everybody has the gumption of JJ or the ability to get through with a film that's important on autism to the holder of music rights. And if you fail to do that, the copyright law says that it's up to $30,000 that you're going to have to pay, or up to $150,000 if it's willful. That's a real incentive to do things right. And in each step, if you want to get something called errors and omissions insurance, which allows you to distribute the film, you're going to have to convince the insurance company that you have every second of that film covered. You have the script, you have everybody under contract, you have all the graphics, you have all the music, and you have done all of your production the way it's supposed to be done. And if you don't do that, then you have what I call a very expensive home movie that your mother and cousins will like. But that's as far as it's going to go.
And maybe the investor has just made a charitable contribution. So let's say the short film is done and the rights are covered. And this is a pretty tightly run ship. And they're taking advice from somebody who knows the industry as you do, if there is anybody who knows the industry quite as well as you do, but somebody skilled. Even then, is the principal question that an investor should be asking about distribution? And if it is, how have the economics of distribution changed?
Distribution has changed a lot in the last 10 years because typically you have all sorts of distribution. You have not only theatrical release, which is actually fairly rare for an independent film, but you have video on demand, you have streaming services, you have YouTube, and that's just in this country. Currently, most of the money from film comes from foreign countries. So if you're going to have a film, most of your revenue should be coming from overseas, and then you could go to a foreign sales distributor. But that all requires advanced planning. Do you have a director who can attract a foreign distributor? Do you have actors? Is the underlying script a universal script, or is it about something that only people in Illinois would like? You really have to focus on that. Because as an investor in most films, you will have zero control over the film. Once your money goes in, that's it. You get a nice ticket to the premiere. You may be able to go on set, but generally you're not going to tell the director what to do, or the producer. That's the way most agreements are set up.
Okay, let's say you go ahead with the investment. Now, it does not mean that you have to follow a certain model, does it? It's not, you're not limited as an investor to putting in your $100,000 or maybe a more modest investment and then just waiting until your turn to get paid happens. I mean, are there other ways in which you can set up an investment?
Sure. You can be a member of the production company as you would in any other business. And then you have more rights. You also have to be careful because if you are a member and you do exercise production control, the Screen Actors Guild and other unions may ask you to guarantee certain distributions, that their payments for their actors.
So you're going to invest and you want to have some say over production because you want the production to keep moving, for example. You want to be at least an available adult in the room. At the same time, you're facing potential guarantee liability from the Screen Actors Guild and others. So wouldn't you then face the choice of how to structure your own investment vehicle to avoid personal liability on the rest of your assets for guarantees and such?
Sure, you could do it that way, but typically what you would do is you would make sure that there's a production schedule.
Yeah.
And that the money doesn't get the wheel. You don't take the wheelbarrow and dump it on the desk of your daughter friend. Cousin.
Good image.
What you do is you say, here's your production schedule. You do what media companies do. You do what television companies do. When they order a production, they will provide a certain percentage up front, and then they will have milestones. And if you meet those milestones, then more money comes in. In that way, the investor will know that if this milestones aren't met, then you're not going to have to give more money. Now, you're in a bad situation because there's nothing less valuable than a 10% made movie. In bigger budget things, we're not talking about big budget things, you have production insurance, which, when the creditors come in or a bank comes in, you have an insurance company that says, all right, if there's a problem with production, I will pay for the production to be finished, and then the creditors can take over the film. And that happens occasionally when films go way over budget. Very, very unlikely that's going to happen for an independent film because that might cost money.
Let's see.
But you may want to build in production rights if they miss takeover rights. If you're going to have if they miss their milestones, then you may say we get the option to take over this production. Now, there are a lot of rules and there are a lot of risks to becoming a producer, but it would give you a way of salvaging some of the IP.
So things are going well, and you're gaining confidence perhaps in the production, but the production needs more money. And you put in a substantial amount, and more money might mean more investors, which might mean a dilution of your take at the end of the day. So you're thinking, can we borrow somehow? How would that work with something so intangible and incomplete and so on?
Well, that's a really good point because you hit upon what most investment agreements should say, which is that there's an anti-dilution clause, that if you give a certain percentage and that your percentage of the waterfall, and the waterfall is basically just the back-end distribution. Everybody agrees who gets paid first. That your percentage of that cannot be diluted, and that if they need more money, then they're going to have to come back to you, and you're going to have the right to take some sort of action. Frankly, you don't have a lot of choice because if they need more money, be $100,000, $500,000, $1 million to finish the film and distribute the film, or to clear the rights from music, for instance, at the end of the film. You may just have to pony up and put in a bit more money or be diluted, and that can happen. As to collateral, most independent filmmakers don't have any form of collateral, so they can't qualify for financing, for debt, essentially, a bridge loan. If you have a name, if George Clooney is sitting in that Starbucks and your niece convinces George to make a cameo appearance based on his appearance and the fact that she's a wonderful writer, maybe she will get a deal with a foreign investor, or a foreign distributor, a pre-sale. The pre-sale agreement basically says, and it's very long, that once you deliver the film to me, and delivery means physical delivery of the digital usually, as well as legal delivery, which shows you have E&O insurance and a big production book full of documents, then I will pay you X amount of dollars. Some banks will loan to you based upon those foreign sales agreements, depending upon what kind they are, so on and so forth. Otherwise, you don't have a lot of collateral, therefore you're not going to qualify. What sometimes happens is an independent film will bring in back-end financing finishing funds. And the finishing funds will be other investors who will get a slightly better deal. And this is where your dilution as an early investor is going to suffer because you're going to be diluted. But, it's better to have a finished film. It's better to have, 5%, 10% of a film that's making money than 100% of a film that can't be shown.
Well, let's go back to the waterfall image because I think it'll identify some of the people who get paid first. And by the way, I've always preferred the champagne glass pyramid image. So you have, 8 champagne glasses and 7 on top of that and 6 on top of that and so forth until you have one at the top and you start pouring. Obviously, the one at the top gets filled before the second level gets anything, et cetera, on down the line.
That's in the business plan.
Okay.
Illustrations and maybe videos of the champagne, of the money pouring out to investors. That's in the business plan. Usually it's not in the private placement memorandum, which says you will lose everything if you invest in this.
Well, that would be an appropriate disclaimer, yes. So what levels of the champagne glasses or waterfall are we talking about who would typically get paid before a wheelbarrow dumping investor?
First, you have to understand that the exhibitor, that is your local Cineplex, will take half, sometimes more, sometimes less, of the box office. So when you see a film come out and the box office is $10 million, well, the first thing is half that money may be staying with the Cineplex, and you'll see them trying to make more money because that's not a lot of money for them. And you see currently that Cineplexes are now becoming luxury items in which they're becoming little malls and offering you food and so on and so forth. That's to kind of increase their take because the number of people in those seats has been going down and down.
Mm-hmm.
So they take their, let's just call it half, which is arbitrary, but half. Then you have distribution costs. And distribution, because you're not going to, as a producer, do your own distribution. You're going to hire a distribution company if you can find one. And the distribution company is going to spend money marketing if it wants to make some money too. And that comes right off the top, as well as the distribution fee that comes right off the top. So that's a little bit less. And then we have the bank. So if you have funds that you borrowed from a bank, you've been fortunate enough, then they will be paid back in their bridge loan. You also have something called a CAM agent, collection account manager, who is basically just very important in film because that guarantees that someone is watching how much revenue is coming in and is making the distributions. The CAM agent takes their percentage. Then you may have deferrals. That is, you may have actors, directors, producers, whatever, who have supposed to get certain salary amounts, but they've been deferred, and they may come before you. You have this little tiny champagne glass at the bottom.
Yeah, I've already managed to mix the wheelbarrow with champagne glasses and waterfalls. And this is beginning to sound, to add another metaphor, like the marlin lashed to the boat and the old man in the sea with one shark after another, taking a hunk out of it and him appearing.
Spencer Tracy was wonderful.
You finish the voyage with nothing.
Yeah, and that's what happens in most films. And the illustration I gave you with respect to Sundance is typical, that there is usually no net revenue to distribute. Even for films that appear to be doing quite well and have a fairly large box office of tens of millions, it may be that there's nothing to distribute to investors.
Ouch.
And we're just talking about independent investors now. We're not talking about bigger films.
Well, let's finish with none of this dissuades some people, And besides, they might think that there's this other fancy new source of capital for this for this labor of love. Can the production get funds from the crowd? And then it occurs to me as I was thinking of that question, whether one might try to get funds from the crowd for the short film but it's less likely to get funds from the crowd for the full film. What do you think of all that?
Well, right now, crowdfunding is definitely the wave of the future, but it's still in the future. There are certain films that have celebrities attached to them, which can raise $1 million. That can happen. But if you go to Kickstarter, they are very good about giving you their statistics on who's been funded, not who's been funded, but the percentage. And you'll see that most of the people who are on Kickstarter do not reach their goals, and that the average is fairly low. It's less than $10,000. So what people are understanding is that using Kickstarter, using crowdfunding, is really a marketing tool, because if I take my film or my project to a Kickstarter, to an Indiegogo, and nobody signs up, or I get a disappointing sign-up, then I know that something has to be done with that film, because if they're not going to support it on a crowdfunding site, likely people are not going to come to the theaters to find this film. That's something that social media can help. You can help. Social media is huge. The Blair Witch Project was an example of an early social media independent film, small budget, which just destroyed some very big budget films that were out against it that weekend. So social media is very important. Building a buzz is really important, especially for an indie film. And there are potential tax considerations. And we're just talking about donations right now. We're not talking about investment, because the SEC is not weighed in. But if you're taking donations, and donation is $50, and the benefit you're giving to the people who donate is $50 or more, perhaps it is a sale. There's all kinds of questions that arise. So even though crowdfunding will become easier, will become more prevalent, it's still not something you can just blindly go into and expect to raise money, and it's not something that doesn't have consequences.
Well, thank you, Bob Labate of Holland and Knight and the DePaul University School of Law. It's been a lot of fun and very informative.
Well, thanks, Chris. I really enjoyed this.
I am Christopher Cahill. This has been Accredited Investor Markets Radio. If you have any comments or suggestions, please write to me at ccahill, that's CCAHILL, at financialpoise.com. Accredited Investor Markets Radio is produced by Stephanie Strait. Let's do this again sometime.
Thank you for joining us. If you enjoyed this episode, you can subscribe through iTunes or Stitcher, or you can download our app from Libsyn. You can also listen right on our website, www.AIMkts.com. Each week, Accredited Investor Markets Radio brings you news and education about investing with a focus on alternative assets. To see a short written summary of this episode, go to www.AIMkts.com. Accredited Investor Markets Radio is a production of Financial Poise Radio Productions, LLC.